All right, welcome everyone. Welcome to the Tuesday live stream for this very new trading week. All right, so hopefully you guys had a great day so far. We certainly have at Charts Focus One. If you guys have been really enjoying the content that I've been putting out, the information, and most importantly, as I always say, the applicable information, make sure you guys smash that like button down below. Well, if you guys don't want to, you guys don't need to. All right, it's all in your hands. So it's all in your hands, just like for trading, right? So with tonight's live stream, I really want to talk about and go more into depth of kind of the small cap strength that we've been seeing. Well, overall small and mid caps, and give you guys a good trade idea that you guys can potentially really profit well from, both on the equity and options trade, as options trade, and potentially, give you guys a really good profitable trade at that as well. So let's go ahead and start off with IWM. So small caps have been really on my target here, in the sense that small caps have been flagging out after its incredible run up, which we caught with members, and we've been kind of moving sideways as the price has really not gone anywhere since we formed our quote-unquote top in December 26th. Okay, this weekly candlestick, and again, if you guys didn't know, this is the weekly time frame, and it should look pretty obvious that it's a weekly time frame. But if you guys are new here, this is the weekly time frame where each candlestick represents one trading week, right? So 5 days worth of price action. So, my apologies, guys. I'm drinking some good boba. So, with this weekly time frame, what I'm looking at was a possibility of this type of a bull pennant bull flag, okay, bullish pennant bull flag, right, or bull pennant if you guys want to keep it simple. It's forming so far. However, I am probably thinking that we can get a bigger breakout, an earlier breakout before we make a complete flag here, an ideal complete flag where we continue to kind of move sideways. So something like this, right? I had this price path structure drawn out weeks ago, but I erased it since it really wasn't needed. But this is what I was kind of expecting, but everything is pointing out towards a bigger breakout to the upside a lot earlier than I thought. And this week in itself has shown that the Russell 2000 really wants to move away from this psychological $200 level. And I've talked about this level since I believe, when was it? I think back in May of 2022 is when I first started mentioning 200. And it became a huge level or huge crux to any type of a bullish reversal to the upside. So this is pretty interesting to see because now the price is continuously staying very close to this $200 level, and now we're continuously staying over the $200 level, and ideally it continues to stay over that level in the near-term future, so around mid to long-term future. And that it's going to matter because this $200 level has been filled with sellers. I pointed this out as time went on, as the years went on, for mostly 2023. I kept on pointing out that this area that's close to 200, and specifically, I think I put 198.50 to around like 199 or 200. Again, it's not too much of a difference there, right? So it's only $1 difference between 200 and 199. So you guys can take it as it is, right? So, and the reason why I say that, I know people out there like to be very specific with their levels. People like to be very general with their levels. But again, it becomes a bit subjective when you're talking about the specifics, right? So again, that's the reason why I say take it as it is. You guys can use the more generalized range, or if you guys want to use the more specific levels based on the data here, right? You guys can do that as well. It doesn't really matter as long as you guys know where the essential and significant price levels are at. So For IWM here, again, this $200 level is definitely changing. It's changing more towards the bullish side. Now, if you take a look at the options activity in Russell, in the Russell 2000, and just overall small caps, we're seeing that the calls, right? The calls really want to move away from 200. We're seeing a lot of options activity, specifically call options, towards more of the 210s and upwards. And it's really hard to be going against what the options market is telling us on small caps, especially as we're seeing a lot more overall volume being traded in record amounts every single year. So options activity is really important to understand, and really important to know how to read in itself. For me, I'm not really too much of a options market reader, but I'm able to understand on a surface level of where things are being more skewed to the call side or to the put side, or again, bullish or bearish, respectively there. And I'm able to kind of understand where the options market is trying to show where the future price, the underlying price, could be heading to. So IWM is definitely looking like it wants to reach at least minimum my first target level at 209. And in respect to, if you guys are wondering, where is this target level even coming from, right? In respects to what? So again, if the price is able to stay over 200, then the only level that we need to start retesting is 209. That's the next level that we need to retest after we move away from 200. And that's currently what we're doing this week and early on as well. So I really wouldn't be surprised if we're able to get a nice breakout by the end of this week over 205, and eventually we hit 206, which by then we'll be making a new higher high from this previous pivot high point at 205.49. So if we're able to get that 206, then most definitely we'll easily get to 209, which is also a huge previous level of resistance and a level of support. And as you guys know, and if you guys might not know, if you guys have not been following me for some time, if you guys are new subscribers, or if you guys have followed me from Instagram, but I always state that price never forgets levels. And this 209 level is going to be significant. And in fact, it's going to be a hard level of resistance to get past. And again, we have not retested the 209 level since early 2022. So February through March of 2022. All right. So, and in fact, now that I'm just looking at this, it'll be perfect timing if we're able to retest 209 heading into, March 1st, which is this Friday, which will also be a complementary signal to when we have first retested the 209 level, when we broke under this 209 level and retested it as a new level of resistance back in February to early March. So, time-wise, that'll be amazing to see, since that'll be the official, 2-year anniversary of retesting this 209 level as a new level of resistance. So with IWM here, I truly think that you guys should be watching it, especially when biotechs and financials have been doing extremely well. There are a lot of biotech activity today, like ticker symbol BKTX or JANX, right? JANX or JANX, or Viking for VKTX. But those are a few names that have been really just rocketing higher today, really helping small caps surge higher into the close as well. And financials itself, for example, even XLF, right? This is the entire financial spider fund here, and on the daily time frame, we just continue to move on up higher and higher with higher highs and higher lows. And yes, the regional banking ETF here, it doesn't look too good, but it's actually holding up, right? So, it's, to me, this seems like there's still a lot more energy left in the overall markets. Now, I want to kind of transition and segue into more on what I think about the overall markets. And again, if you guys didn't know, I have a new free monthly newsletter called The Market Trends. And I'm going to be going a lot deeper and diving a lot deeper into what we can expect for the month of March, since it looks like we're most likely going to be closing this month, this very, very short month of February, positive. So, I'm going to go really, really in depth in that Market Trends newsletter. So if you guys want to opt into that, it's free. Again, it's free. One newsletter or one email per month, right? One email. Okay. And if you guys really want to join in, make sure you guys DM me on Instagram and let me know. I will automatically opt you guys in. All I need is a full name and email address. All right. All right. So back to what I was saying. So for the overall market, so the S&P 500, I truly think that we are definitely needing at least a tame pullback, so around a 5% pullback. I'm still holding that thought. But again, as I've been saying for the past couple of weeks, this is just a presumption, because again, the market is getting very overextended. We're still seeing a lot of overextension going on, especially in a lot of the growth names. We're still seeing those underlying signs that there is a lot of problems that are still working itself to really, at some point in the future, who knows, will definitely cause and will become a major factor into causing an overall market pullback. But, right, I've been saying this in the CFO String and Watch newsletter. Right, all my private members and students know about this. Even if we have all of those underlying factors and underlying indications, we still need to follow the market trend. And guess what? The market trend in the short term, midterm, and long term are all to the upside, right? So again, my presumption and my quote-unquote prediction into the future and what could happen to the markets are still going to be invalidated currently, right? I'm just keeping it in the back of my head for now. Now, the reason why I always mention that is that it's important to know that your bias is going to be your downfall, right? So in order to not have so much bias and so much confidence into something that can completely ruin your entire trading account or portfolio, is by making sure that you understand that the market can still go against whatever you're thinking, right? The market will not give a crap about your predictions into the future, your presumptions, your assumptions, whatever it may be. It's not going to give a crap about what you think and will continue to do its own thing. And so if you want to make sure that you're not mentally destroyed or even financially destroyed, you want to make sure that you understand that what you have in the future, especially with my predictive analysis into the future and the overall markets, I need to personally understand that it's just an assumption, right? It's an assumption. I can't do much more than it being an assumption, right? I can't act on it because I'm not seeing it in the markets, or I'm not seeing my future predictions coming to life through my naked eyes of what I'm observing. So again, if you guys want to stay mentally stable and financially stable without destroying yourself on both fronts, you guys need to understand that having a bias it can be dangerous, but it can be very helpful if you know what you're doing, right? And if you know that, you should understand that following the market trends are more important than trying to push a narrative that you made up for yourself with the bias onto the markets. And the markets will never care about your own narrative or your own thoughts or predictions or etc. Okay, so that's my little tangent of the night, but again, you guys get the gist, right, of what I'm trying to say here. So yeah, if the markets do pull back, I expect IWM to actually do the opposite. Or I've been saying this for the past month and a half, and so far IWM today saw a nice increase in volume thanks to that nice pop in the overall markets like the S&P 500, Nasdaq, and also Russell 2000 or the mid caps, right? MDY. So the overall markets really did well today, even if it did stay a bit weak early in the morning, but we gained a lot more relative strength across every single sector, across every market, and we're able to close very positively in the last few minutes as the markets ran up into close. So IWM here, definitely watch out tomorrow with this descending resistance trend line. This will be pretty important for you guys to understand, why I'm looking at this potential trend lines and how these trend lines can affect future price action. But most importantly, I really want you guys to take a look at this descending resistance trend line that we're about to retest for a third time, right? We had the first time here, the second time over here, and potentially tomorrow for a third time. So if you're able to get that third retest and breakout tomorrow, hey, we might be well on our way to that 209 resistance level that I've been talking about earlier. Okay, so again, IWM, these small caps have been dominating the overall markets for the past couple of weeks, individually as well, especially biotechs, right? XBI, right? XBI has been on a tear today. Again, thanks to all those individual biotech stocks like VKTX, right? VKTX, JANX, okay? They've all been absolutely rocketing to the upside, right? So it's pretty important to understand, where I'm coming from with this, that the fact that, small caps can really outrun the overall markets if the overall markets decide to pull back, and we can see a lot more concentration and dominance in the small to mid caps as people focus more on the quote-unquote less popular and smaller cap, obviously, companies. So again, it's important. It's very, very important to understand that I'm not trying to make a relationship here that small and mid caps will move inversely to the markets. That's not what I mean. All I'm saying here is that small caps will continue to show some relative strength even if the markets decide to have a tame pullback. Yes, initially everything should pull back if the markets decide. Well, when I say markets, the S&P 500 decides to pull back. Everything will be dragged along with it, but IWM shouldn't be affected too much if the markets do pull back a lot quicker and a lot more than what I'm expecting. So that is kind of my my outline of my thoughts and my predictions that I have for the future. But again, I'm not going to hold it against the market if it doesn't do that, right? I'm just making sure that I personally understand that it's just a bias that I have in the future, and I'm putting it in the back of my head. And I'm telling myself that, hey, the markets are still moving to the upside. There are no visible price action currently telling me that, hey, the trend is to the downside and we need to be shorting or we need to be protecting our long-term positions. Nothing is screaming that just yet. All I'm letting you guys know is that I still hold this future pullback perspective. Right, a very tame pullback, around a 5% pullback. I'm still going to hold my thoughts into the mid to long-term future. So make sure you guys are clear on that, right? I don't want you guys to get confused, right? And again, my continuance of my predictions, my future predictions will be changing. And if you guys are wondering why, well, because I'm watching data points, right? I'm watching the actual data occurring right in front of me, right? Every market open. So, I've seen a lot of people, getting offended or people getting, very, very defensive about their biases. And again, the markets aren't going to care, right? You need to be flexible, right? That's a key word there, flexibility. And if you aren't flexible, then you're going to be kicked out of this trading game. And so, that's the reason why my thinking has slowly evolved from a pullback about 7 to 8% to about 5%. I'm still going to hold that thought into the longer term future. But again, I'm going to hold that the markets are the truth. Right? I mean, that's what more can I say, right? I'm waving my hands around right now. I know you guys can't see me, but literally, I can't say much to my prediction, right? I mean, the markets aren't telling me that my predictions are correct yet. It has yet to be realized. So again, make sure you guys are always understanding that you need to be flexible, even if you have a very, very confident bias on a certain stock or a certain company or just the overall market. Or you guys need to understand that you can be wrong. Okay, so with that, I want to go over this specific trade idea, A firm. Okay, A firm. So I actually mentioned this in my Twitter page. So hopefully you guys are following my Twitter page or X page, if you guys want to call it that. I didn't even see here, but 4 likes. Thank you guys. So A firm. Okay, I want to first show you guys the first post here. Okay, let me see. Let me just find it real quick. I talked about it yesterday, so it should be right here, or actually 2 days ago. 2 days ago. Okay. So first of all, A firm. Okay, this is the post. Okay, so this was first posted on February 5th, and this is what I said, right? You guys can go read it by yourselves if you guys want to take a look at it. It's a really good thread. Well, that's what I believe. I believe it to be a very good thread to read and understand, and the reasons why I've said these things. But the overall succinct summary is that A firm has been on the weekly time frame, just waiting for the weekly 21 SMA to catch up, right? If you guys take a look here, on every single one of my my posts here, you guys can see this white arrow, right? So this is where I'm tracking my weekly 21 SMA, this light blue line, and every single time I give it an update, it's currently moving, right? It's trying to catch up to the price. And 2 days ago, on February 25th, right, this is what I said. Weekly is still showing the bull flag still with redrawn trend lines with the new data. Again, flexibility is the key word for tonight. And I said there's a nice little weekly doji as the weekly 21 SMA continues to rise. And it nearly invalidated the previous flag, again, this flag right here, this bull pennant, by dipping below $36. Watch this week. Now, why did I say that? Why did I say watch it this week? Well, first of all, obviously, this is hindsight 2020 here, but so far, we're making a nice run up to the start of this week. But the reason why I said that is that the weekly 21 SMA is really catching up now. And the price is finally cut in between the weekly 10 and weekly 21 SMAs. And why does that matter? Well, on any time frame, whenever my short-term 10 and 21 SMAs decide to get really tight and it starts to contract the price action in a very tight price range, we tend to see a very, very large breakout. Now, if you guys can guess, right, I'll give you guys a few seconds to answer to this question, but to answer this question, but where do you guys think that I'm leaning towards for A firm? Bullish or bearish? Give you guys a few seconds to answer that question. This boba is very nice. Well, I think that was almost a minute, but the answer is bullish, right? I mean, the weekly time frame is just absolutely bullish, right? There's no indication that this one is going to be bearish. Just the chart pattern alone tells you that there is a lot of constructive consolidation going on after this huge short squeeze like run, right? I mean, the volume in itself after this initial impulsive run up has completely died down, which means we're about to see a very large breakout out of this bull flag. All right, this very, very nice bull flag that we've been making for, 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, including this week. Or if you guys want to do 10 weeks, that's completely fine. If you guys want to use this as the first indication that that the price is going to start a new consolidation phase after a nice impulsive run up. So why am I mentioning this stock? Well, because again, the weekly 21 SMA has finally caught up. It's used an entire month to slowly catch up. And if you guys go back to my original post on Twitter about Affirm on February 5th, you guys can see that the weekly 21 SMA was far away, right? But now it has completely caught up. It's at $35.17 today at close, and it should continue to rise up until it reaches $36. But by that point, the price should be over $40. And so with this one, with Affirm, if you guys want a nice long-term entry point, a confirmed entry point, I would say a very good entry point will be over $42. That'll be the official breakout entry point for Affirm. For options, all right, so for options, now I want you guys to pay attention very, very carefully from this point forward, okay? So again, a long-term entry point for an equity position will be over, again, $42. If you guys want even more confirmation, 42.50 is completely fine as well. That is completely fine. All right, but again, that doesn't really matter. It's only a 50-cent difference. So if you guys want to use 42 or 42.50, it doesn't matter, as long as you're able to get that nice breakout entry to the upside. So as the price continues to, get squeezed essentially here between the weekly 10 and the weekly 21 SMA, the price is going to get the price ranges for this week and even next week, potentially, if you don't break out this week, will get very, very tight. And just the volume in itself after earnings here completely died down. All right, we're stair-stepping down, which also indicates just volume by itself that we're about to see a very nice breakout and a continuation to the upside. So for options, what am I looking at for options for Affirm? So I want to be able to capture with time this entire move and breakout to the upside. So first of all, if you do break out over 42 or 42.50, whichever you guys want to choose, the first price target is obviously going to be $48, right? This is the major resistance level that we formed since we have been consolidating, basically. Kind of in the midpoint of this consolidation, so around the 5th or 6th week, right? This is where we had our kind of last retest at 48 before moving lower and lower and lower. So this $48 resistance has become a pretty huge crux to any type of reversal to the upside, even on the earnings week here that I've just mentioned, right? So if you're able to get a nice, at least half out profit at 48, that'll be amazing. Now, obviously, if I wanted a breakout over 42, I would want to see a larger run up to the upside. So that means I want to see a sustained breakout over 48, and ultimately we hit 55.50 through 56. So there's a kind of a slim supply area between 55.50 through 56. And the reason why I say that as well, if you look back here, okay, back to its IPO days, IPO lows, there's a lot of supply. Right? There's a huge amount of supply here. So it's going to take a miracle to really take out all the short sellers. But if we're able to take out any of the shorts here at the IPO lows, and it's a pretty wide range, from 56 to around 71.50, that'll be amazing, right? That will be amazing for the option contracts that I'm looking at, because again, naked call options have an unlimited potential for unlimited profits, right? Before expiration date. Obviously, if you guys know what you guys are doing. Okay, so for Affirm, the option contract that I really want now, with these target prices now discussed, or price targets, or TPPT, doesn't really matter, right? People like to use target prices or profit targets, PT, but synonymous. Synonymous, right? So I am looking at, okay, I want to give you guys this options chain here from Yahoo Finance. I like to use Yahoo Finance. It's very, very clean. It shows me everything that I need to know. The most important ones being volume and open interest. So Yahoo Finance here, I'm really liking the 50 strike. Okay, yes, I mean there's a lot of volume on the 60 strike. I mean that's kind of pushing it on the strike wise and to where the current price, the underlying share price is at. I want to say at least relatively close to the underlying share price. But again, I want to have a lot of time. So April 19th is the minimum that I want to go out to. I can go all the way out to July 19th is what I was initially thinking. But if we're able to get a nice breakout, I want to be able to capture as many of the profits that I can from a closer dated expiring contract on a large breakout move to the upside, especially on that first target at 48. So if we're able to hit 48, we'll be getting very close to 50, and I want to be able to be in really good solid contracts with a very easy strike price, right? And what I mean by easy is that people love to use whole numbers, right? 50.00. And so usually when you're looking at very liquid names, and if you take a look at their option contracts and the strikes and the overall strikes, you start to notice that there are a lot more volume, there's a lot more daily activity, right? The volume and open interest on all of these whole number levels, right? So 50, 60, 70, okay? Or even just like in between as well, between the 10, I guess $10 intervals, right? Maybe it might be the $5 intervals. But whatever it is, people like to use the simpler numbers. So 50 is definitely going to be an easy one for me to look at and potentially trade and even get tomorrow. A little wink wink there. As a little hint as to why I'm looking at this tonight as I'm kind of going over the markets. But A-firm here definitely has the hallmarks of a potential short squeeze again to the upside. And again, it's going to take a miracle again to really try to break over 56 and head into this wide supply area or range between 56 to 71.50. But hey, we can dream, right? We can dream. But A-firm, I'm definitely looking to get this at 50, this 50 strike contract that expires on April 19th. And ride it to the upside and see a nice breakout over 42 and hit 48. Okay, so this is an early entry point compared to the equity entry point over $42 or 42.50, whichever entry you guys like to use or would like to use. But again, the risks are there, and I've told you guys what the risks are, especially when it comes to early entries using option contracts. Right? If you guys have been following me for some time, I have really delved into this for the past 3 years. So again, early entry points, especially when you're using option contracts, are high risk and should be considered a high risk trade. So yes, we have enough time in these contracts. We have more than a month here, almost 2 months worth of time. And again, I'm choosing $50 because very liquid, easy strike number for a contract, and also it kind of lines up with our 48 resistance level. And basically, I want us to break over 48, right? And eventually, I would like to see 50, okay? Which isn't that far away from 48, right? It's only a $2 difference. So if we're able to hit 50, I would want to see at the very least my contracts becoming at the money. And ideally, I want to see those contracts becoming in the money as we rise higher over 50 and eventually head over to that 56 resistance level, or kind of in that tight resistance area between 55.50 to 56. Okay, so that is my entire kind of a free trade idea for you guys for tonight on A-firm. Okay, so hopefully you guys enjoyed that kind of breakdown as to why I'm looking at this one. And definitely, most definitely, please go onto my Twitter channel. I'll even give you guys a link here and read the very first post on A-Firm. Okay, on A-Firm. Right, it's from February 5th. So a few weeks ago here. So make sure, let me give you guys this link here. Make sure you guys bookmark it, do whatever you guys can to really understand why I talked about this on February 5th. Okay, so here it is. Okay, make sure you guys take a look at this post. But again, this is my entire analysis, very simple, and reason why I want to look at A-Firm going into tomorrow, and why I am looking at this name for a potential breakout and a squeeze to the upside, or basically a continuation run or a second leg up higher out of this nice weekly bull flag. All right, so again, focus on my SMAs here. I know that some of you guys use EMAs or different SMAs, but I really want to emphasize my weekly 10 and 21 SMAs that are continuously starting to squeeze the price as the weekly 21 SMA catches up. And you guys will understand why that is important as you guys read my my Twitter post on A-Firm on February 5th. Okay, so again, read that original post from February 5th and bookmark that post as well for future reference and future reading. All right, so that is it for tonight, guys. Thank you guys so much for watching. Hey, Joe, what's up? You kind of came in late, but that's okay. You guys can watch the recording as always. And whoa, 5 likes. There we go. We reached the target for tonight. And hopefully we can always reach 5 or at least 10 likes every single night. But hey, that's all on you guys. The power is on your fingertips on that mouse. But again, guys, I'm always here to provide valuable and most importantly, applicable information. So if you guys like what I'm doing, make sure you guys smash that like button down below. And if you guys aren't subscribed yet, I don't know why you guys wouldn't be, make sure you guys hit that subscribe button along with the notification bell as well, so that you guys can know when I am live, or you guys know when I have uploaded a new video. But for all the new people here, we do live streams every single trading week on Tuesdays and Thursdays at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time sharp. So that is my live stream schedule, and I'm looking to add more if people want to have more. But seems like people are really liking this Tuesday and Thursday format for the live streams, so I'll keep it at that. But again, for everyone who's just joining in right now, I really, really want you guys to watch this recording from beginning to the end. I really, really stress the importance of watching this live stream from the beginning to the end, because I talk about IWM and the overall markets and what I think for the future price action and trends in the overall markets, and especially for small caps like the Russell 2000. And then near the halfway point of the live stream, I talk about A-Firm. All right, and I give you guys a full breakdown and a potential trade that you guys can get. All right, so if you guys want to capitalize on a potential opportunity, this is your time and opportunity and chance. Okay, I am stressing this importance here. I'm grabbing my hands and putting them up together in a prayer mode fashion so that you guys can hopefully watch this recording from the beginning to the end. Okay? All right, guys, so that is it for tonight. Thank you guys so much for watching. Good luck tomorrow. Make sure you guys are always following your own risk management rules. And yeah, I will see you guys on Thursday at the same time. Have a great rest of your night, and thank you guys so much for watching.